Welcome to day 4, right? Yeah, day 4. We're going to continue the underwriting that we left off on the other day. So let me pull that up for everyone here. Share my screen. So we understand that this deal just doesn't work. Agency loan. It would need to be a bridge loan. But for the sake of training purposes, we're just going to assume that we can get a loan on this deal, not a bridge loan, just for the sake of underwriting and not have to start over on something else. So were there any questions about everything we went over on this page of the underwriting template from the other day?
No.
Oh, okay.
What is to the far right? What I was like,
So
if
the
you
far right,
scroll.
this is so the only time I really fill this stuff out is if I'm going to actually show it to investors, because they want to see that everything's broken out. So you can put in, all your unit counts, how much they're getting. It doesn't actually populate anywhere. It's just so you.
Oh, it doesn't.
And then this right here, these are what he calls rules of thumb. Now, you can adjust this for yourself. I just found that if you're looking at more than one market, they're going to be all over the place. So I don't ever use it. But if you have an idea of what your taxes are and insurance are, you can auto-populate them in here so that you can just grab them. I generally have an idea that just from memory of what I use, but it's good to have them in there if you want to put them in there.
Yeah, that's kind of nice.
Yeah, it'd be nice to kind of save that for each market, maybe. Like if you're doing a bunch in the same market.
Yeah, and I just have, like I said, I know in my market about what things are, so I can just plug them in. And once you do enough of these, you kind of remember them yourself. So, all right, so we're just going to assume that we're going to have a purchase price of $750,000. I did change it just because I tweaked something. It's not quite there. I lowered the interest rate to 8. Like I said, we're going to assume that we're getting an agency loan on this. The next page here is the summary tab. Just kind of gives you a breakdown of everything, and you want to go in here and take a look. So based on that, your EMD is going to be 7,500.
Wouldn't that be great?
It would be great.
Ask a clarifying question.
Sure.
This tab has pulled in the 4th column.
Correct. So right here, you can toggle back and forth if you want to
I
change
see
it.
that. Oh, very cool. Okay, like that.
Can you make more scenarios on that first page if you wanted to compare like 6 different? Can you like I guess just copy a paste?
That's awesome.
What do you mean?
Oh, well, there's 4 there. What if I wanted to do like some different? I mean, I was just wondering. I just noticed on that toggle, if you pulled the toggle down, it showed like 10 scenarios, but on the first page there's 4. So I was just wondering if you really wanted to do a side by side and compare some different, to change the levers a little bit, different things like cap rate, exit, or something. If you could do it side by side that way, but
You'd actually have to go in here and add another column here next
yeah,
to in order to
and then
do
like
that.
copy and paste the formulas or something. But that could be kind of cool. Anyway,
Yeah,
okay.
Oh my gosh, you guys are crazy.
Yeah, like I said originally, I don't even use version the second column or the third column.
3 is a lot.
Actuals,
4
I
is a
put
lot
in
of
mine
columns.
and I move on. Like you're just trying to come to a price on this page is really the what you want to do here.
Okay.
So then the summary page, it's pulling everything off that 4th column here. Earnest money deposit. This is always negotiable depending on the seller. Generally, we were offering 2%, 3% if we really wanted to, be above and beyond everyone else. It's kind of the norm, 2% right now. Our interest rate, we don't have a second mortgage here. Estimated closing costs, our acquisition fee. We generally do 3% on acquisition fee. And this is where you're going to adjust your returns. So based on what you do as a group, whether you want to do, an 80-20 split, a 70-30, a 50-50, however you want to divide up the deal is this is where you go. We generally do a 70-30. Asset management fee is normally 2%. And then capital transaction fee to a manager. This is when you sell the property, so generally 1%. So come in here, and you can adjust all this so that every time you pull it up, you have the blank template and you don't need to go in and change all this. If you want to do a preferred return, you could do that. We've never done a preferred return because properties don't cash flow enough to do a preferred return. So I'm not going to offer an 8% preferred return when the property's cash flowing 6%, because all that money in arrears is going to add up at the end, and then we don't get paid for 5 years. So, excuse me, it all depends on how you want to structure your deals, is how you're going to come in here and change this part of the template. Does all that make sense so far?
Yeah.
Yeah,
Mhm.
Michael, good morning.
good morning. Sorry, guys.
No worries.
I snuck in there when we were all paying attention to the spreadsheet.
So here is our profit and loss, our P&L. This is where we're going to start making tweaks to our property to show how we're going to take advantage of the value add. It starts off with a 2%. Normally, I would put these at 3%. Now, regardless of the number you use here, if you're going to increase your rent by 5% every year, you're going to increase your expenses by 5% per year. I hate when I see, oh, we're going to increase our rent by 8%, but our expenses are only going to go up 2%. No, if your expenses go up 8%, or your rent goes up 8%, so will your expenses. Right now, in today's market, depending on the market, Charlotte's one of my markets as well. Its rent is declining. So for year one, if I was underwriting my deal in Charlotte right now, I'd put 0% here. Oops.
So can I ask a question then?
Absolutely.
Can you tell me what justification you use to always have the rent and the expenses match when you're putting them on a spreadsheet?
Sure. So if your rent is increasing, all of your other stuff needs to increase as well. So your advertising will have to go up because you're spending more for the property. Your repairs and maintenance are going to go up. Everything's based off of a percentage.
Is that because you're turning over more units because rent's going up?
Sure, you could have more people moving out versus staying. It's really a situational thing, but everything I've seen in all of my time doing this, and every property management company that you talk to will suggest, if you're going to underwrite it this way, your rent is going to increase, and so are your expenses, and it will.
Okay.
Will it always increase that much? Not always, but you always want to take a conservative approach to underwriting this. I would rather say that my expenses are going to go up 8% if I'm saying my rent is going to go up 8%, and maybe they only go up 6%, and then I look great to my investors. But if I tell them rent's going to go up 8% and I only end up getting 7%, but my expenses go up 7%, you see what I mean? Like, investors are going to go through this and pick apart every little thing. So I always would rather say that it's going to be worse than it actually will be.
Okay, yeah. Thank you.
So for the sake of it, for normal underwriting, we're just going to leave it at the 3% increases. Again, this is going to depend on your market and how much you look into your market. I just know what's going on in Charlotte right now because that market was so hot and it's on the decline, which is actually a great thing when you want to start buying there. So we know that our gross potential rent here is $392,000. We have a ton of vacancy, and we have a ton of concessions, loss of lease, and bad debt. Does everyone understand the difference between these three? So your concessions are if you're renting units for $1,000 and you decide to give someone a free month, that's a concession. So there's $1,000 towards concessions. Loss to lease is if you have a unit that rents for $1,000 and you decide to rent it out for $900 a month, you have $100 loss to lease every month on that unit. Bad debt is any money that is owed to you that a tenant has not paid. So this underwriting template combines them all. Personally, I'd rather see them broken out individually, which my other template does. But for the sake of simple underwriting, like I said, this template's very good. Other income, that could be pet fees, parking fees, laundry, whatever it is. And we'll definitely want to look at how we can increase that to help, raise the value of the property. Here's what I'll tell you from experience. You'll see brokers, they like to tell you that in year 2, you're fully stabilized, doing everything, and the property's, running at 100% efficiency. I can tell you from experience that does not happen. It takes about 3 to 6 months before you can even start making any changes on a property. You have to get in, figure out what's going on. You have to notify tenants that with leases that are renewing, especially if you're renovating, it's very hard to move in and start renovating a property within 3 months. So generally what I like to do is year 1 is going to stay exactly the way it is. Again, I'd rather under promise and over deliver. Will we make improvements? Will things be better? Absolutely. But I don't want to show too much income more than what it's already generating in year 1, just because of the process it takes to start actually taking over a property. Year 2 is where I'm going to start making my adjustments. I'm going to assume that in year 1, there's only 48 units. I'm going to knock this down about 50%. So let's just call it 11% on the vacancy. And concessions, let's call it 18%. And then in year 3, we're humming along and vacancy is down to whatever the market vacancy is. Don't let a broker tell you 5%. They always like to say 5% in their performance. You're going to have to find out from either your property management company or CoStar report what the market vacancy rate is for that type of property. Don't compare yourself to a Class A property. Compare it to, this is probably a Class C property. So let's just assume that it's at 8%. We're going to leave it at 8%. You're always going to have some concessions, some loss to lease, some bad debt. General rule of thumb is 2 to 3%. This is a smaller property, so you might only be 2, maybe 3, but that's going to be a judgment call on your end. Basically, after that, that's how our pro forma is going to look from taking over the property. And the rest of this shows you everything that's going on. So you can look down here, or you can go back to, or you go to your exit strategy, or your returns here and see. You can see in year 2, we start to lower our expenses to about 50% when you're talking about a property 70, 80s. 45 to 50% expense ratio is where you want to be. This does get a little low. It's a little concerning. Again, you want to talk to your property management company. Once you get to this point, everything you do is going to be discussed with your property management company. They are going to look over your underwriting, and they're going to let you know whether they can actually perform this business or not. And if they can't, they're going to tell you. If they can, they're going to say, this is good. Hey, we want to change this. Realistically, you should spend more on advertising because this is what we're seeing in the market. So you always want someone else to be looking at your underwriting other than just yourself. I don't see anything that's alarming here.
That's why we got you, Brad.
Trust me, if you send me your underwriting, I will pick it apart.
Oh, I'm sure you will.
I love when I see underwriting and they don't adjust their taxes and they don't adjust their insurance right off the bat. And I want to put my head through the wall because it's just so frustrating. It's the simplest thing to do, but nobody ever does it.
If you wanted to adjust your taxes more than 3% per year, you just I mean, it looks like that 3% applies to all expenses. How would maybe I just want like taxes to be 5%, or maybe they reevaluate like in, what is it? Is it South Carolina? They reevaluate every 4 years. Would you just go manually put a number in that column? Or is there,
Phenomenal question. Yes, absolutely. So you'll find out from calling your county tax assessor office for that market, how they evaluate taxes, what the rate is, and when they do it. So this property, if assuming at sale, it gets reevaluated and the taxes are, to stay $11,000, then you're fine. But if they will reevaluate and say 2025, so we're buying here 24, they're going to reevaluate here, we can just come in here and manually change that number to what we believe it's going to be.
okay, yeah.
So while the template is, you really only need to change what's blue. Yes, there's going to be some cases where you want to come in here and manually change things. And when you do that, you will be in big trouble with investors if you don't tell them why. So if I do something like that, I come in here and I highlight it. And then I'll move over here and I'll put a note in, 2025 taxes, and I explain exactly what I did. So that way,
Now,
go ahead.
I'm sorry. Now, does that populate into another cell? Do you know what I mean? Does that like change all the rest of your numbers, or you're
So-
changing those numbers down there singly?
Why is it not clicking on it? There we go. So it's 1175. I just want to make sure I put it back right.
Okay.
So if I change it here, watch, this one's 12,103. Oops, why is that? Hey. Sorry, I don't know why it sometimes it does this. Hang on. See, it just changed it to 25,750.
Wow.
So it will change everything down there. So always make sure that if you do change something, make sure it changes. And if you ever have to adjust it, make sure you go back and correct it. I try not to unless I have to, but you definitely can if you need to.
I do have another question.
Sure.
Well, and it has to do with increasing rents over time, because there's always the classic units that you can increase by $75 a month, but then once you renovate, you can increase it by $250 or $3. Does this have some way to sort of calculate that? It seems like that would just be built into the concessions, your sort of guess on, or I mean on your loss to lease. To break out like, we're going to renovate 10% of the units year one, and so we'll be able to raise the rent on 10% of those units, and then we have.
So this does not
20%.
break it out that much. You can always just do that manually. You can always just come back to your scenarios tab and this box right here. You can always add stuff and do it here. The synthesis one has a little bit more. I think you can do, actually, let me just make sure. See, I don't use this one a ton anymore. Make sure.
I know there's some place on there that you put all that because we used this one for the Serena Vista property. It has like, yeah, I believe it's on there somewhere.
I've looked at deals using the Michael Blanc's template, and I think it doesn't. At least I couldn't
I could
find
be
it,
wrong.
because that was kind of always one of my questions. Is I would often see like a rent escalator, and they put like 18% in year one, and I was like, yeah, but wait, is that just like your renovated rents are going up 18%, or is that what they?
So here in synthesis is where you can
Synthesis.
determine all your stuff of what you're doing.
Interior
Like I said, Michael Blank is
yeah.
a very basic one, and this one has
Sure.
bells and whistles in it. So if that's something you want to lay out and see, you could do that. You can always just build that out in an Excel spreadsheet if you want.
Sure. Okay.
But as far as this one, like I said, it's just a basic one.
What's
Okay.
this one called?
When you see people, this is how I underwrite deals. You will
Mhm.
see some people who will just pop in the 20% rent escalator as instead of changing it here. I
Yeah.
like to do it this way. Some people will do it differently. There's no one way to underwrite. It's just how they choose to do it. This was the way I learned. This was the way that I know many people like David Monroe underwrite. One thing that was very entertaining for me, and I say entertaining because I really wanted to get mad at some people. When we were going through our deals and my partners were bringing in capital raisers, all of them wanted to pick apart my underwriting and tell me how to underwrite like they did. It doesn't work that way. You underwrite the way you underwrite, and you explained how you underwrite it. So you'll get people that will say that, oh, I'd like to see that up here. Well, that's great. I don't do it that way. But yeah, that's just a preference, Stacy. Does all that make sense?
Yeah, no, that makes sense. Okay.
So for the time being, this is how I would leave this right now, and then I would go and I would check out my exit strategy tab. And let me see, make sure we're right here. So we are buying this property at a 6.67 cap. Now, when you change this right here, it auto populates on that extra strategy tab. So if you're going to do a 5 years, it adds 5 basis points to it. Everyone understand that? This is the way most people will do that. They will add 5 basis points just to say they're conservative. It really depends on the market. If your market, depending on the cycle, is trending up and you believe that in 5 years it may actually be less, then I would leave it at the cap rate that you bought it at. I would never put it below the cap rate that you bought it at, because again, we want to be conservative, but you don't necessarily have to add 5 basis points. But investors will ask you why you did it that way. Just make sure that you have an explanation. So let's just assume that we're going to hold this property for 5 years. There's not going to be any cash out refinance. We got our 5 years right there. You can always, change it here to see, what different scenarios look like. Based on the really low purchase price, because it's not doing well, we have astronomical returns right here. These are not normal, but this is just to give you an idea. So this page shows you everything, how much the NOI is going to be at year 5, the cap rate you're going to sell it at. I did not put in my my other reserves here yet either, so I got to put that in. Sorry. Again, haven't used this one a ton to do all my underwriting on. Forget where to put it at. You got to put in, 1 year of taxes. The lender is going to require you to have 1 year of taxes in escrow, along with your principal and interest for probably 6 months is generally what we see. I just don't remember off the top. Okay, here's where I throw it in at usually. So I'll put my taxes in here. And then my it's insurance. Oh, and insurance as well. I think insurance is 40.
Oh, you're on the acquisition cost. Okay.
And then I'm going to take the principal or the P&I or the interest only off here just to show you guys. So you can come right down here. Here's your principal. Here's your interest. 46,227. I would just put in 47,000. Just to make sure that it's in there, because it does affect your returns. Then you can come over here to your returns tab. And this is just all the information you're going to need. Just move this out of my way here. So this is the project. This is the returns overall in the entire project. So you have a 5x equity multiple. This is what you would get as the GP if you're a solo GP. Be your cash flow and your returns at sale. And then this is generally what you want to show an investor based on how much they want to put in. So, $100,000. This is their cash flow for the first, let's return on investment, sorry.
All right, let's go offer these guys $500,000.
Very, doesn't it? So that's what the investor wants to see. They want to see what my cash flow is every year. And then they want to see how much they're going to get. And then you can even come down here. So if you have multiple partners, you can pop in all the information and see exactly all the percentages of everything and how much everyone's going to get.
Can you go back to the acquisition costs really quick? Okay.
So these
With
are
these-
all, numbers that are in there. You can change them based on, your market or what they're going to cost. Generally, they're pretty close. But again, right now we're in assumptions mode, right? We're just making assumptions to see if we want to move forward. All this would get confirmed down the road. Property inspection, you could put in all that. I can't remember what ours cost when we were in Kansas, but as you go, you continue to go back through this and fine tune it. This is just, hey, do I want to move forward on this deal? Do I want to call the broker, find out more things? This is
how many months of insurance do you do?
Here?
In the close, for reserves.
A year.
Okay, 1 year taxes and insurance, 6 months principal and interest.
Correct. And again, that's a conversation with your lender that could change. Maybe they'll only say we only need 3 months principals and interest. This is just like the
ballpark. Yeah.
So that is the underwriting part for today. What I want to do now is I want to go through and start showing everyone. So you'll want to start breaking down everything in your rent rolls. There's not a whole lot to do on these. It's kind of self-explanatory. Questions that I would want to know just from looking at this.
No deposits from anybody.
Yes. Why are there no deposits? So that's a question you're gonna want to ask your broker. Market rent, what they can get for rent. Pretty self-explanatory. Same over here. Why is nobody paying, deposits? Let's get into the P&L. So what I want to do with this right here is just kind of show you guys how I walk through all this. And there's a lot going on in this, more so than others, just because it's probably, well, actually it's a bigger owner, which is surprising, but I'm going to come in here and I'm going to start looking at everything line by line and looking through everything and see if there's any anomalies. What I mean by that is laundry income. We got a ton of income here, but then none here, none here, none here. I'm going to ask the broker, what's the discrepancies in the month to month for laundry? Why is it like that? Same with the cleaning income. I just want to understand why it's 182 1 month, but nothing the rest of the year. Same with the other income. What is it from? Why is it only 1 month? Repairs, again, 1 month, why is it not the rest? Management fees, these are going to change based on the occupancy of the property. So you're going to get some discrepancies there, but nothing's alarming. It's not like this is 700 and this is, 1,800 and then 700 again. Big concern that there's no maintenance going on. I mean,
very little anyway off of our old property.
Right.
1 month.
HVAC repairs in November and December. One service call all year. Plumbing repairs I mean, that could be as stuff breaks. I'd still want to understand why some months were nothing. Electrical repairs, again, why are some months nothing? Lock sets, I can kind of understand. Hey, maybe only one person got locked out all year. Pest control. Why are you not spraying a 1978 property every single month?
In Texas.
Landscaping. I know it's not a big property, but again, I mean, starts off in January. Where'd it go? I mean, I got
Where they
nothing.
just gave up on this property. It
Yeah,
just
it
turned
looks that
into
way.
shit.
August 23 too.
That's why they're trying to sell it, I guess.
Utilities, I'd want to know why there's a negative. And it's quite a big difference when you have 564 and a negative the next month. Could just be a billing error, but then we see it happen over here. All they do have some all bills paid, so that could be why. Again, I just want it in writing from a broker of what's going on, just so if something were to come up down the road and I can go back and say, hey, Mr. Broker, you told me it was this, but it's really this, and this is a bigger issue. Gas, same thing. You know, we have some months that have nothing again. That shouldn't be. Again, we got
they're paying for
water,
bill
everything's about $2,000 or so a month, and then we got nothing here. Why?
because they paid it in the next month, so they were late paying their bill.
Yep, that more than likely is why. Again, I'm still gonna write it in an email to a broker. I want confirmation. Other expenses, who knows what that is? I mean, it's $16. Again, I'm still gonna ask. Property taxes, normal. Insurance, normal. Expenses again are going to fluctuate depending on you know, what's going on in the property. Other than that, so what I would do is I'd pull up my email, I'd tell the broker where I'm at with the property, how it looks, and here are some questions I'd like to get answers for, and I would literally just list them in bullet points down, and I'd send it off to the broker and wait for a response. They're usually pretty good at getting back to you within a day or two on all of that. Let's see here. Time. Okay. So once we get that email off to the broker, what's our next actionable steps that we can do for this property to fine tune our underwriting?
You mean like getting the rents in the areas, like you know, the neighboring properties, like actually checking them, like that kind of thing, calling and getting the rents.
Sure.
On
So
the city,
what was that, Michael?
so calling the city, getting the tax factors, the mill rate, maybe
Yep.
if you needed.
Absolutely.
Stuff like
Sophia will touch on yours first. What you could do is you can call up your property management company, ask them for a co-source report for you know, comparables. They'll pull that for you, send it off to you, and then you can do your rent analysis based on that. You can also go into apartments.com, just zoom in on the area, look for similar properties, size, age, amenities, and then pull their rents. And then once you figure out what your comparables are that you're going to actually use for the property, then what you want to do is you want to actually call everybody. And like I said, you could do this one of two ways. You could tell them you're an investor looking to buy a property, or you can act like you're a renter and then ask them all about the property. Hey, I want to rent a 1-bedroom. What's it cost? Are there any deals that you're giving anybody right now? I have a dog. How much is a dog? Do you have a washer and dryer? You want to start asking all these questions to make sure that all your comps are good comps. And then that way you also understand what's going on in the market. Are there concessions being given? So that way you know that, hey, if I think I can get $900 a unit, but everyone's given you know, taking $100 off for the first year, you know, then you know that maybe you can only get 800. And then next, like Michael said, call the county tax assessor's office. There's no problem with telling them what the property is, how much it's going to sell for. These are just employees. They're not going to do anything. They're not going to go run to somebody and say, oh, this property is being sold. We need to reevaluate it right now. So don't worry about that. Find out all the information you need to know, the mill rate, how they assess it, when it will be assessed. A lot of the people that you talk to will tell you, well, the mill rate for this year hasn't come out yet, blah, blah. That's wonderful. Tell me what last year's is. I can figure it out on my own. What else? When it would be reassessed again. Sometimes it just gets reassessed at sale, and never again until another sale. Sometimes it'll be every couple of years, like Stacy mentioned in South Carolina, they are like that. So always just make sure that you find out how it gets assessed, the rate, when, and everything. That way you have all that information. You'll want to call an insurance company. They'll ask you, and I would only do this with properties that you feel like you're going to submit an offer on, because you don't want to waste their time. If you build a good relationship with someone, they're happy to help you out, but they don't want to be looking at every single property that you're just considering. They'll send you a list of all the questions that they need answered in order to give you, an accurate quote. Excuse me. Age, location. I'm trying to think what else they usually ask for.
Roof.
They'll want to know about the roofs, the electrical, parking lot, stuff like that. All depends on your insurance guy. I have one guy that is just like, give me 3 things and I can give you a ballpark. Others, they want to get a lot more specific. So call and get that, because I will tell you this, insurance has gone through the roof in the last few years. Properties that I was looking at a year ago at $400 a door for insurance are $1,500 a door for insurance. So you always want to make sure that you have these correct numbers, that you don't get to a point where you submit an offer and then go, oh crap, I messed up.
Yeah, that's one tough thing about Texas is they reevaluate every year, and you have to like basically go and what's the word, contest the taxes every single year. So
And that's
some
all
more.
part of knowing your market, where you're investing, and being prepared for all of these things. You'll want to talk with your property management company once you get beyond, your rent comps. Put them all in here, make sure you have them. When I get to the point where I'm actually going to go to PSA and actually sign for a property, then I'll actually sit down with my property management company and do a Zoom and go over everything. A good one will just take your stuff, send them your rent comps, what you're looking to do, the renovation budget, and send them this, and they'll tell you whether they think it's good or not. They will send you back feedback, and just in terms of an email, hey, your payroll's a little low, or your insurance is a little light. They'll kind of let you know the adjustments to make. But then a good one, like I said, once you're actually going to buy the property, they'll actually sit down when you do a Zoom call and go through this line by line. In terms of finding a good property management company, through my experience, the way I've picked them, I know there's a lot of people out there that have 40, 50 questions that they like to ask property management companies. I don't think that's necessary. I think the biggest things are, do they handle multifamily properties? Do they have other multifamily properties in the area? And the biggest thing that I look for is how they treat you before you have a deal with them. So I've called property management companies. Here's how I got them. I go on apartments.com. I look around the area of where the property is that I'm looking at, and I find all the property management companies there, and I call them, assuming that they're handling properties the same size. If I'm looking at a 40 unit and I see Greystar is there and they got 400 units at every property, I'm not calling Greystar. But there's going to be smaller ones, and you'll have to ask them whether they handle 40 units. Do they have 40 units? But how they respond to you when you don't have a property they're managing for you, I think is big. I've had property management companies that I found that I asked them to go tour the property for me, and they thought I was nuts. They're like, I'm not doing that. Well, Okay, then I'm not going to deal with you. I've had other property management companies where I called them up. They went and toured the property on my behalf. They took pictures for me. They did some light underwriting. They pulled CoStar reports for me. So when you start finding a property management company that's willing to work with you before you even have a property with them, that's a great green flag. So feel them out, see how they are. You're going to have to kind of go through a couple to see which ones are good, but that's generally how I find property management companies. But again, there'll be some
Oh,
questions.
I'm
you
like,
guys
where's
know.
that coming?
What's that?
Oh, sorry.
Oh, sorry. So then you can start asking them all the questions that you need to ask them about your underwriting. That's pretty much everything that I have for today. Is there any questions on anything that we went over regarding the process up to this point?
No, this was good.
So I'm not actually going to talk to a property management company about this deal just because it's not really a deal, and I don't want to waste anyone's time. So we're not actually going to be getting feedback from our broker and fine tuning this. So what I'm going to do is we'll start underwriting a new property on Friday. If anyone has one that they want to underwrite, let me know and we can do that instead of me finding one.
I do.
Okay.
Yeah, we do.
I need to get a current rent roll in T12 though. It just has this long ass OM with a bunch of stuff in it, but
Okay. Yeah, I mean, I'm happy to underwrite anything you guys are looking at. So that way you guys can see, in your markets what's going on, and then we can actually have you write that email to the broker to ask those questions, find your property management company, show them the underwriting if we can within the next week, and actually maybe go through the whole process of, I'm assuming it's a good deal and we want to try to move forward on it. If it's not a good deal, I don't want to, waste anyone's time. You know what I mean?
it's the one thing I can say about criteria and stuff is it is an older property. It's a 1971. And it's 128 units. I've just been kind of feeling out, Connecticut and trying to get an idea of how they're trading there and what's going on. And I had a good conversation with the broker and I told him, what we were looking for and stuff like that. But he's like, let me just, because they don't have like a ton of inventory, like always going. So he said, let me just send you this so you can see how we typically do our OMs and kind of get a feel for things. So we kind of had that understanding that, I'm trying to get to know the market and he's showing me how they're kind of typically doing things there so I can get an understanding if it's a good fit or not. So that's kind of
And I
what's
want
going
to
on
just
with
touch on something you just mentioned. You said there was not a lot of inventory. My student that I had before, like I told you, he picked Des Moines, Iowa, and Jacksonville, Florida. Those are very small markets, and there's not much for sale there all the time. So be cautious of very small markets when you're looking at stuff, because if there's not much coming up, you're not going to have much of an opportunity. There's not much trading right now just because of the market. I was actually listening to something Rod Khleif said last night. They had a deal that they're putting in an offer on. He believes that they're going to win the deal. It was listed at 28 million and they offered 20. So the prices have to come down because of interest rates. So be cautious of what's available. Does anyone have an idea, if you're going to look at bigger properties, syndication, how many properties you need to actually look at in order to buy one right now?
Like 100 to 1.
It was
100.
100 to 1 in 2021. I don't know about now. 500? I don't know.
I don't know that it was ever that low, Jody. I mean, with me, I'm probably around 400 to 1. I've heard people say 300 to 1. It's a lot. You got to go through a lot of properties, and I don't think that necessarily means underwriting it to this extent. It's just that it fits your buy box. You looked at it in some shape or form, and you just weren't able to make an offer. Yes, when the first books that I read, it was look at 100 properties, submit 30 offers. So yeah, submit 30 offers, and then you think win 3 and you buy 1 or something like that. It's much higher than that now, but I also do think that with everything that's going wrong in the industry right now, all the people that bought bad, there's going to be a lot of people that get out of this business, and it may come down a little bit, but you have to weed through a lot of deals. So like I said, smaller markets, you're not going to see a whole lot. Consider that. So
Yeah.
That's a lot of offers, like really in all reality, if you look at 100 deals, I don't think you're gonna find 30 that you want to submit offers on.
no,
That
those are
seems weird.
old numbers. Yeah.
Yeah, maybe 10, but yeah, when the interest rates were low and everything, a lot of people, buying properties did say like they underwrote like 100 deals. Like maybe what they mean by underwrite is like full, like full underwriting, not just like, oh, that doesn't really match or that doesn't really match. But yeah, I would think it would be higher now. I remember in 2021 in Texas, like every brokerage had like 10 properties going to market every single week. So they had a ton of
Yeah,
inventory.
it was a seller's market, and it was hard to get a broker on the phone. They would never call you back because they didn't need
Yeah.
to. And it was very funny for me when the market shifted. All of a sudden, everyone wanted to call me and get me to look at their deal.
Yeah.
All of a sudden, they couldn't sell anything anymore. I would say realistically, you're probably going to submit offers on 2 or 3% of the properties you look at until there's a major change, which is coming.
Yeah.
Okay,
True
well, we just gotta
that.
get really good at the dirty underwriting so that we can, go through them quickly enough to see which ones we want to look at deeper.
Absolutely. And some things that's why everything that I'm going to teach you guys is to save you time. So when you go through, let me see if I can pull it up. Yeah, to keep it up. Okay. So anytime I go through an OM to start, I'm always looking, does it fit my criteria? Okay, it does. I'm going to continue to look. Some things that I want to look for. We touched on this the other day a little bit. At this point, I generally don't read any of this. It's just not. I would suggest the first few that you get from brokers, excuse me, read them just to get an understanding of how they put stuff out, what they're looking at, how they're looking at it. Because some of them are short. I mean, if you get one that's 100 pages long, obviously you're not going to read every little thing, but I mean, effective rent, market rent, this is pro forma rent. So you're almost at $200. If I saw this, I'm like, okay, we're walking that line and this may be a deal. It's going to really depend on those rent comps. But I also see these pictures. This is a heavy rehab. This is not cosmetic. I want cosmetic. I want $3,000 to $5,000 in rehab. This is 8 to 12. So for this, I already know right now, if I got to put $12,000 into this unit, $200 rent bump isn't going to get it. The return metrics are not going to work. So for me, this is one of the first things that I'm going to look at. Then I want to look at how is the property actually running, which you can actually see from here. Quick, roughly 40 something percent. I can see that. Okay. I can't really do much with efficiencies probably. I'm not going to operate this property on much less expenses than it's already doing. If it's, 55, 60%, well, that's a good sign. Now, I might not actually be able to change it because this is a Texas property and taxes are high. So I've seen somewhere they're running great. It's just the taxes are killing the deal. I'm looking at their rent comps just to see how close they pulled them. If they're all right here, that's a good sign. It is kind of spaced out. So I want to make sure I'm using good comparables in terms of what they're using. They're probably not bad. This is a small town. Just, depends on the neighborhoods. And again, that's knowing your market more. And those are pretty much it. That's what I want to look at real quick, just to kind of get a sense of what's going on. And again, a lot of this business is, feeling. You're going to get a feeling whether you should move forward, change some things. And that just comes from, underwriting deals. When I started, if I could get my hands on an OM, a rent roll, and financials, I underwrote the deal. I underwrote probably 1,000 deals my first year. Some of you don't have time to do all that. I made sure I had time to do all that, but even if the deal doesn't look good, just underwrite it for now, because you'll get a sense of how to start moving things around, how to change boxes, how to adjust stuff, how to pull the information out of the OM. Just do the practice, because the faster you get at it, the faster you can burn through these things. I think the first one I took me probably 4 or 5 hours to underwrite. Now I do my pencil underwriting in probably 20 minutes.
Awesome. Yeah, we don't want to waste time going really deep as if we're trying to save the place, if it's not going to turn out. So.
Right. Oh, I just thought of something. The last thing that I look for is what the current rent is and how much current unit is selling for. If they're trying to sell a unit renting for $800 for $150,000 a door, that deal doesn't work. If they're trying to sell a unit that's renting for 800 for 80 grand a door, that deal probably will work, depending on how much upside there is. But those are the couple little things that I look for, because I just know that if there's a $700 delta between rent price and rent, that deal just won't work, because I've underwritten those deals. I just know they don't work.
Is that kind of 1% kind of a rule, like kind of a good ballpark? 800 to 80,000.
I was just going to ask.
Like 1%.
Yes and no. It depends on the deal. So you may have a deal that's got a ton of upside, and maybe they're trying to sell it for 120 a door, and then you can actually raise rents to $1,200. That may actually pencil out, depending. You'll have to see, but it really just depends on the upside at that point. So if I see that they want to sell for 120 a door and they're renting for $800, how much can I raise rents? They're telling me $125. I'm not going to bother. $925 and $120 per door is not going to pencil out.
Right. Okay. It sounds like, the 1%'s a good ballpark on both, like if you current, but also where will it be when it's stabilized?
Yeah, because
Ballpark.
I learned this going through COVID, I literally just got frustrated and wanted to see how I can make a deal work. So I just took everything I could get my hands on, and I just kept underwriting. How can I fine tune it? How can I make a little bit extra money? How can I add a little bit of extra income? And when you start doing that, you start seeing the little things that you can do to a property to make it more, raise the income. I don't know if I told you guys this, but I know that in Greensboro, North Carolina, if I have a Class A building, I can charge premium views for every corner unit in the property, another $40. If you don't know that, you don't underwrite it. And these are just things about learning your market and how you can make a little bit of extra money.
Awesome. Those are good notes.
Anything else? Any other questions?
I don't think so.
Mhm.
Well, if you can get all that information for Friday, we'll underwrite your deal on Friday.
All right, that'd be cool.
Yeah, it's been awesome.
I hope everybody has an amazing Thanksgiving tomorrow.
Yep, you too.
Yeah,
Yeah, you too, everybody. Have a nice one.
Ew.
thank you.
All right. Okay, I will see you guys Friday morning.
All right.
Thank
Good
you,
night, guys.
Brad.
All right,
have a
have
good
a
day.
good day.
Have a good day. Happy Thanksgiving.